Hey everybody, in today's video we are going to be discussing a bunch of new cover call ETFs. One new all-in-one cover call ETF. This will be all-in-one number 5 in the Canadian market, and we'll also be discussing 3 new cover call ETFs by Horizon. So buckle up. Again, welcome to Cover Call ETF Investing. I'm Jordan. Let's get into this. Okay, so this first one, which was the news was broken to me just scrolling through YouTube. I just want to give a shout out to Dividend Income Investing for doing a short little video on this, and I was so excited to see a brand new all-in-one fund, especially by BMO ZWC, a high cover call dividend ETF was the first I had ever bought, and I loaded up my entire TFSA into that one fund. So I'm no stranger to BMO funds. So we'll go over, at least to start with, this fund, the things that I like about it, and then some of the things I'm sort of meh about, okay? Or something that I feel like the people who like my content, or even if you are a newcomer, that you should understand and look out for. So the first off is this right here, Enhanced Income. If you are newer to cover call ETFs, typically the term enhanced income usually implies leverage, debt, usually implies borrowed money to enhance fund performance, capital appreciation, as well as yield performance as well. But that's a misnomer. This fund does not have leverage. No debt, no borrowed money of any kind. The funds within ZWQT all have the same strategy. 50% coverage on each portfolio, and the call options written are out of the money. Now, again, for beginners, that might sound like a lot of gobbledygook, but I will just say this. It just simply means that with the coverage and the out of the money call writing options, just means that BMO is typically more defensive, kind of similar to Brompton funds. Let's go over the AUM, assets under management. So it hasn't been updated since its inception. We can see here $1.49 million. It'd be nice if they kind of update this on a more regular basis than just simply the initial day of the launch. Another, I would say, concern, this is a big one because this is going to be a thread with this fund and all the other funds we're about to cover. And that is this management fee of 0.65%. Now, if you are, again, familiar with cover call, this number is actually pretty similar to all the other Canadian cover call ETFs out there. But keep in mind that this is a management fee on top of management fees that you're going to be paying for all these underlying cover call ETFs. Remember, these are all basically 0.65, but now you're going to have to tack on an additional 0.65. There are other funds out there that don't do this. So Harvest and Brompton funds, they have ETFs that invest in other ETFs, but also advertise 0% management fees, as you'll see with right here. So this is a fund, Harvest's Tech Achievers Enhanced Income Fund, which is basically this ETF right here that invests in this one ETF. So it's an ETF that invests in one ETF. The difference being is this one has leverage on it, this one does not. So this one just simply gets applied here with leverage, and because it's an in-house product, they say it's a zero management fee. Now, with all of Brompton's products, where it's an ETF that invests in ETF, you'll say this same zero management fee as an example. Okay, let's move back over to BMO. So something to keep in mind, I think, as the fund matures, and I believe once the calendar year ends, we will get a better idea of what the all-in costs are, which would be the management fees, the trading fees, and the leverage costs as well. Okay, but that's a bit of a That's just something to keep in mind of if this is an ETF that interests you. Okay, and then as we were just looking at, it holds 10 funds. We got the BMO Global High Dividend Cover Call ETF, the BMO US High Dividend Cover Call ETF. Now there are two versions of this. This one trades in Canadian dollars but is unhedged, meaning that the currency does affect the fund's performance as well. Okay, whereas the US dividend cover call hedged to CAD, Canadian dollar, ETF, the currency isn't an issue. So we don't have to worry about price dollar fluctuations affecting the share price. But if you were to just compare those two ETFs, that would be the difference, if you're wondering. So one of the things I actually really like about this fund is that, in my opinion, BMO is probably the only cover call ETF provider in Canada that has any funds that focus on sort of a global scale, as you can see here, also on Europe as well. Plus they mix in this US high dividend cover call and the first cover call, of course, I invest in, which was ZWC. But the big thing that I was initially excited about when I saw Enhanced Income was also going to be the yield. And it falls pretty much in line with all of their other ETFs. So 6.8%. I'm kind of hoping one of these days BMO kind of breaks out of their defensive nature and creates a bunch of truly enhanced versions of their ETFs. I would really like to see that and maybe get a little spicy with some of their stuff. But nonetheless, they are the biggest provider, I would say, have by far and away most assets under management. Other cover calls combined are catching up because this is a big bank, one of the big six. They are the king of cover call ETFs amongst the banks that provide cover call ETFs. Lesser known RBC actually holds some cover calls, and TD actually has, I believe, 2 cover calls as well, ETFs, but small yields, and that's why they haven't been covered on the channel. Okay, next up we have this big announcement by Horizons, which is this enhance your passive income and growth potential with our new big and bold strategies. So this, as a light overview, will kind of give us a better idea of what exactly they're offering. They are not cover call related, but they are offering this new equal weight banks Canadian ETF that is not going to have a management fee for a whole year. They're also lowering the management fees of existing cover call ETFs. So we have BKCC, which covers Canadian banks, CNCC, large cap Canadian equity, and USCC.U. And basically what that means is with the expense ratios dropping from the usual 0.65 to 0.75 down to 0.39, which does make it the cheapest cover call ETFs in Canada. And also the cheapest cover call ETFs, I think, out there, or at least competitive, period. The only other cover call ETFs that I'm aware of are US listed with JEPI and JEPQ, with their fund manager being JP Morgan. But again, the ones that I wanted to focus on were these 3 Canadian banks. You can see here that the management fee lowering will increase this yield slightly, and then adding the 25% leverage increases the yield. We can see it across all 3 of these funds. I'm interested in all of them, but I gotta say I'm kind of gravitating more towards these 2, mainly because this Canadian large cap equity cover call ETF with leverage on it would be I think one of the highest out there, as well as for the US coverage. This would be the highest as well. Okay, so we'll do a side-by-side comparison. So we're looking at USCL, Horizons Enhanced US Large Cap Equity Cover Call ETF. Its target yield is around 14%, and its non-leverage version is 11.5. Now, if we go back to the leverage version ETF, again, something we're going to have to look out for, which I discussed with that BMO fund, is the fact that there's this management fee, and it's investing in an in-house product, which again is going to have a management fee of 0.65 as well. Now we see that this fund is just so new. If you scroll through this entire product fact sheet, everything is pretty much just not applicable at the moment. So that's just how new it is. But I wanted to cover this one first just because it has the most trading volume of those three New Horizons covered call ETFs. So if you are investing in this, you're potentially doubling your 0.6 management fee. Now again, I shouldn't say doubling because they are lowering those other three funds. That again kind of is a misnomer because they might be lowering those fees just to bring, just so that maybe this product is only slightly, so that they can add this management fee to this while also simultaneously saying, hey, we got some of the cheapest covered call ETFs out there. Now, I might be putting words into their mouth. We need probably a full calendar year to go by so when we can actually look at a fact sheet. So I tried to pull that up for the Horizons Enhanced Canadian, basically one of the three that I just mentioned that are new. And if we go all the way to the bottom, how much does it cost? And it's basically just, we just don't know yet. It's way too new to know. And then if we go to the Canadian large cap equity leverage version, we see that we get 12.5% target yield. The non-leverage version is 10%. That bank cover call ETF target is 10.6. I mean, these cover call ETFs are getting pretty juicy, I must say. The non-leverage version is 12.43. I wanted to show you all, and I'm sure most of you are familiar with HYLD. This has been, I would say, the darling cover call ETF in Canada. Maybe not as much since it lowered its distribution yield 2 months ago. I just wanted to show that this ETF that has a management fee of 0.65% also invests in other ETFs with management fees of 0.65%. But I would say with HYLD, and to be fair to it, it invests in a bunch of cover call funds that do not fall under the Hamilton ETF umbrella, which is why the biggest holding in my TFSA is HYLD. We got JP Morgan, Horizons, Harvest, Global X, more Horizons, and CI. So this makes sense. Now, if we break down the trading costs and the management fee costs and the leverage costs of HYLD, it's actually competitive with those zero management fee advertising ETFs, which would be Harvest and Brompton funds. They are fairly similar. And I did a video on the cost of owning HYLD and compared the way that you would be paying for all of those costs between Hamilton ETFs provides and the products Harvest ETFs provide. Okay, well, with that being said, I hope you all enjoyed the video, learned something new today. Hopefully you understand in a lot better, greater detail. I am excited for these products, I truly am, but I also want to make sure that people who are investing in these products understand what you're getting into. Please don't just mindlessly invest in this stuff just because of yield. It is a major part of my strategy, but also educating people on it as well is very important to me, and I'm very passionate about it. So with that being said, as always, do the cliche thing, smash all the buttons of the like and subscribe variety. I'll see you all in the next video.